All right, so this is day 6 of my journey to $500,000 portfolio, stock market portfolio. All right, so today, August 12th. So the equity in my margin account dropped, of course, since the whole market dropped today. The balance shown in the home section here is not up to date. The one on the right side at the bottom here is more up to date. So as you can see, my total equity is 7,065 in Canadian, but in the home section it says 79.45 Canadian. So this one here is more up to date. All right, so what did I do today? So first thing, I bought American Airlines. So I placed a covered call trade on American Airlines. The second one expiring September 20th. All right, so I bought 100 shares of American Airlines today at 27.91. Sold a covered call at 28 strike. So 28 is my max selling price. Expiring September 20th, but I'm collecting $1.41 for that. So come expiry date, if American Airlines is trading above $28, regardless if it's trading at 30, 31, my max profit is 27.91 minus $1.41. So 26.5 minus 28. So my max profit is $1.50 on 26.50, which is 5.6% in about 5 weeks. So the other trade I placed today was a vertical put on the SPY, which tracks the S&P 500. So basically a 30-day trade expiring September 13. Basically, if the SPY stays above 277, I make a full profit of about $80. As long as it stays above 277, I make my full profit of $80. And between now and September 13, if the trade shows a profit, I can close it early. So as you can see right now, if I combine the negative 14 and the $10, I'm actually down $4 on this trade. So all I need really is for the SPY to stay above 277. Right now it's trading at around 288. My Tesla Iron Condor, which expires August 30th, so I still have about 2 or 3 weeks. 3 weeks, yeah. So it's showing a profit right now. I can actually close it out early. And the profit is about, if you look at the difference here, 170 minus 130, so $40. And then 174 minus, so another $20. So it's showing a profit of about $60 right now if I close it out early. But my max profit is about $125. So now I have to decide if I want to close it out early for $60 or do I want to take the risk until August 30th to make an extra $65. So basically double. But for an extra 3 weeks, I need Tesla to stay between 260 and 205. So it depends on my comfort level. So general rule would be to close it out early for a profit, but I think I'm going to hold on to it because this trade I actually placed because I was adjusting another Iron Condor that I lost money on. So I sort of need the full profit of this trade just to compensate for the loss of another trade. But we'll see. But basically that's how an Iron Condor works. You start the trade by giving yourself a range. Now there's many ways of deciding the range that you want based on probabilities. And then the general rule is to close it out early to remove risk from the table. The longer you hold on to it, the more risk you have of the stock price going outside the range. So as soon as you have a chance to close out the trade for a profit, a decent profit, of course, usually 50%, it's always best to take that 50% and open a new trade. So my Uber covered call trade, I had a chance to close it out on Friday for a $100 profit. My max profit is about $217. And I basically decided to wait an extra week just to make my max profit of $200. And then today the stock drops to 37. So definitely regret it. I should have closed it out last week. And then I would have had the money to buy it back again today. But obviously I didn't know that it was going to drop, but as a general rule, if I have a decent profit, I should close out the trade. Weight Watchers dropped pretty hard today, almost 8%. So back down to 28.65. I just needed to drop to 25 and I'm happy. So I'm already up $260. I'm already up $260 on the call option that I sold, which expires September 20th, but at a 25 strike. So another trade I placed today is a Grubhub. I had a 70 strike price expiring August 16th, so this Friday. It was down to like 50 cents, so I decided to roll over my call option to September 20th. So I went from August 16th to September 20th, keeping the same strike of 70, but I collected $2. So basically first month I collected about $3.30. Second month now expiring September 20th, I collected $2. So first month it represents a return of 4.7%, and now the second month represents a return of 2.8%, which is what I'm looking for. I have Halliburton that expired last Friday. So now I still own the shares because my strike was 23. The stock is trading at 19.5. So I still keep my shares. So now I have a chance to write another call option. But unfortunately, when I try to sell a call option at a 23 strike, the premiums are so small, it's not worth it. So either I go further out, maybe till October, or I buy more shares of Halliburton and then sell a call option at a lower strike price, but I haven't decided yet. I kind of want to give it a chance to go back up because I feel like the only reason it dropped hard because the general market dropped hard and most of the energy stocks dropped. So I think when market slowly rebounds, it's going to come back up to 21, 22, and then I can sell a call option at a 23 strike, collecting a decent premium. So I still have my Netflix so for this vertical put here, I needed to stay above 310. Right now it's at 310.67. So I think it has a good chance of being above 310 by Friday. But then I've got another one here that needs to be above 320 by Friday. So this one's a bit risky. See, this one, if I wanted to close it out right now, I'd close it out for about a little bit over $3. So it's a little bit expensive. But the plan is, come Friday, if it's not above 320, I'll just roll it over to the next month. And I'm pretty confident that if I give it an extra 4 or 5 weeks, I think Netflix will be above 320, unless the whole market crashes. So if I wanted to roll it over, basically I just click create order here. I'll remove the call, so I don't have to really close it. It'll expire worthless because Netflix will be trading below 360 for sure. Alright, so what's going to happen is that I'm going to end up closing this trade. So I'll have to pay for it. But at the same time, I'll create a new one, a new vertical put. So let's say sell, and I'm going to go to September 20th, for example. And I'm going to sell at a 320 strike because that's the strike because that's my short strike that's in question. And I'm going to buy the same thing. So I'm going to buy the 315. So basically, I'm choosing the same strikes, but I'm just extending the expiry date. So instead of August 16, it'll be September 20th. Hopefully I can do this for a credit. Okay, and as you can see right now, it would be for a debit actually. I wouldn't even be able to roll it over for a credit. It would actually cost me money to roll it over just to give myself another opportunity for Netflix to be above 320 come September 20th. But hopefully we're just maybe because we're after hours, so these numbers are not up to date. I would have to see it during market hours to see what the real value would be to roll it over to the next month. But normally you should be able to roll it over for a credit. Let's see what happens if I go a little bit further. Let's see September 27th. Yeah, still a debit. And let's try October 18. Yeah, still a debit. So I'll wait to see market hour when market is open, but definitely I wouldn't want to close it. I wouldn't want to pay full price to close it right now. If I close it early, I'd lose about $300. I think if I just extend the period, there's a good chance that Netflix is going to come back over 320. So in my RSP account, I have Yeti here that has a 33 strike, which expires Friday. And as you can see, it's worth only 5 cents. So I can probably close it out early and maybe sell another call option at the same strike price. So let's see what I can get. So I'd have to buy back the call option that expires August 16. But I can sell another one, let's say for September 20th at a 33 strike. So September 20th does not have 33. So I'll go to September 13 at a 33 strike. And as you can see, I could do it for a credit. I have about probably maybe 70 cents. So 70 cents divided by 33 represents a 2.1% return in about 4 weeks. All right, so that was a quick overview of my portfolio today and the trades that I placed. So if you have any questions or any suggestions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also check out the other referral links below. Thanks for watching.